Good morning. The purpose of the video today is to show how easy it is to build a dividend portfolio in 2023 from scratch. Before you can even start to invest, you have to figure out what is your budget. The best way to do that is you can create it through many different spreadsheets, but to even start on how to invest, what to invest in, you have to understand how much money you have on a monthly basis per check that's going towards your bills. And then from there on, you're able to see how much money you have left over. Then you can, from there within your budget, you can see how much you can allocate towards investing. Give you an example. So right here, you have what I have coming in. This is right here is what I have in terms of expenses. Now this will be different than yours. Rather, if it's someone that's making $30,000 per year, $40,000, $50,000 per year. It all depends on your monthly expenses. But when you put it like this, and you can use this as a template, you are able to see basically all where your money is going. So for example, you see right here is my main bills, and on a monthly basis, that's about $407 for the first check, and for my second check, I'm paying roughly $1,600 for my second check because I have a mortgage and I have solar panels for my solar panels for my house. But besides that, once you know and you create a spreadsheet, you see what are your expenses, then you can see how much you can allocate towards investing. And then this is outside of the money that you put into for your 401k. So if you're investing into your 401k, always try to invest up to the match of what the company is giving you matching. Where so if your company match dollar for dollar up to 4%, 5%, do that first, and then whatever you can invest afterwards, then you can look here and see what your budget is. And trust me, I started with $0. You can too, but before you can even dip your toe into investing, you need to see what your expenses are. So if you would like to just use this as an example, or create another creative way, you can be my guest. You don't have to follow my way. This is just to show you that it's for you to hold yourself accountable as you're starting out with $0 to see how much money you can afford to invest. So you see, for me, I'm planning on investing about roughly like $1,500 per month in all my different investment accounts, spread across my different investment accounts. I've been investing for 5 years. You will be different, but the budget first. Come down with the budget, see what you got your money coming in, see where your money is going, and then you can figure out to see if you can start out with $100 per month, $250 per month to even graduate to wanting to spend more than that. Now, to show you that once you have figured out how to do your budget and see how much the money you got coming in, how much money that's leaving your account, the next thing you got to really figure out is that just got to get started. Got to get started. We spend a lot of our money going to the club, Starbucks. For me, my vices, chicken. I love chicken. I love tacos. I love going to Torchy's down here in Houston, Texas. I love to eat, but that is like my play money. And so we always can allocate to find an extra $100 to $200 per check. It just depends on where you're spending it. And so after you create your budget, you can actually see where your money is going, and you can see how to allocate an additional 100, 150. But in this example, you started with virtually with $0. Here you have to put a dollar amount to even to start the model. And so with $1,200 annual per year, that's really just $100 per month. That's just like the bare minimum. And so I know somebody can scrape away $100. And so with that, it shows that if a person if they can contribute to their 401k 4%, and then if they just wanted to create a portfolio out of nowhere, for $100 per month will be $1,200 per year with a annual dividend yield of 3.5%, a 10% increase portfolio, and a portfolio increase of about 10%. If you were to consistently do this $100, which is nothing, after 30 years, you have a portfolio balance of 350,000, producing to $10,000, $810. So that's if by creating your budget first and then figure out how much you can allocate. So if you want to double it. So let's say that you start to get good with your money with the budget. You start to see like, oh man, wow, this budget I saw in the previous screen that Cordero did, I did it, and I was able to cut certain things. And instead of investing $100, I can invest $200 per month. When you do that, it shows that all the amounts should double, and by doing that, you see basically the amounts double really. And so after 30 years of consistent investing, you've already invested into your 401k with whatever match your company is doing, and then it only investing $200 per month for 30 years. You have a portfolio balance of $700,285, producing $21,620 of dividend income. And this is a side of whatever money that you got invested into your 401k. This is also money that's not your Social Security. Once you decide to want to file for your Social Security, this is just portfolio balance. So all you gotta do is I'm showing that just because I'm investing $1,500 a month, if you just can spare just sacrificing and investing at least $200 per month, and you're doing consistently, you can. And then if you can make more money through side hustles, driving Uber, DoorDash, a YouTube channel, and let it grow and let it compound, start a business, or get a raise, get a bonus, you can honestly increase this amount from $200 to maybe $450 per month. And then if you have a spouse, their income combined with your income, you can invest more. But we just will start out just with $100 per month, contributing $200 per month, and seeing how it grows. Because when you stay consistent, that snowball it increases. And so now let's talk about where do you invest your money into. So you created the budget as in the first screen. Now you want to invest at least $100 to $250 per month. Cordero, what do I invest into? You can either invest into ETFs. We could talk about ETFs in another video, but we're going to talk about dividend stocks, creating a dividend stock portfolio. Here is a website called the Dividend Aristocrats, and what you'll find out is that the Dividend Aristocrats are a group of stocks that have been increasing their dividends for the past 25 plus years. And a lot of companies in here is what a lot of people are familiar with, like Air Products. You'll see like Colgate, which is a Palmolive, the toothpaste and dishwasher liquid, ExxonMobil, McDonald's, PepsiCo. And so typically what people tend to do is that once you figure out how much you want to invest in terms of a budget, then the next thing you want to do is to pick at least between minimum 10 to about 25 stocks. A lot of times when people start out, they start out with at least 5 to 10. And then they go off of the Dividend Aristocrats lists, stocks that they're familiar with, that they know, that they, brand loyalties like Coca-Cola, yes, like Coca-Cola, Centos, Clorox, ExxonMobil. And so then the next step is that once you have your group of 10 to about 15 stocks starting out, that you want to invest into, you have a strong conviction. The next thing is to figure out the brokerage. So the famous brokerage that people invest into is Fidelity, Charles Schwab, and then also M1 Finance. And then lastly, once you start that, then once you start to eventually down the line begin to get your dividend income rolling in, then the next thing is to figure out what type of dividend tracker that you like to use. So I typically use Track Your Dividends, and it has a nice calendar to show. Like right here, it's just showing that virtually every month I'm making over $100 per month. But then here is another. here is another dividend tracker called the Dividend Tracker. I know, right? The irony. And here I also have put in all of my 32 holdings. And as you see, I have a lot of the dividend aristocrats even in my portfolio, like Ultra Group, McDonald's, Coke, uh, what else? Microsoft and Starbucks are not dividend aristocrats. I think they're like champions or challengers, but they're approaching in a couple years, 5 or 6 years, to increasing their dividends for 25 plus years. And you want companies like that in your portfolio because uh, you don't want to be in retirement and your income is great to have Social Security, but yeah, Social Security it increases or COLA increases with cost of living adjustment due to that year. But sometimes if you file for Social Security too early, you only maybe getting maybe 1,200 to 1,500 per month. I'm saying only, like that's nothing. But what happens is that with inflation going up a lot these past years alone, 6%, 7%, 8%, that $1,200 is going to be eaten up by inflation. So you're going to need something that going to be paying you consistently, that's going to grow consistently over the inflation. That's why I love dividends, because a lot of these dividend stocks like Best Buy uh, increase their dividend like over 15%. McDonald's increased their dividends over like 7.9%. And you think like, that's only 7%, right? But imagine when you're working at a job, you get one paycheck. Imagine you stay consistent and you pick at least a group of 10 stocks that you truly love, high conviction, and those stocks growing per year. You know, the dividend income grows from annual from 25 to 27 to 28, 30. And on a 30-year basis, it grows to, substantially. So, and this is on top of you creating a business or a YouTube channel, Social Security, your 401k. It's just an extra buffer of income to help either you when you're being single, if you have a family, or my ultimate goal is to move outside of the U.S. Hence, my channel is dividend investing, lifestyle, travel, and I travel a lot and use a lot of this money to let it grow, invest in crypto, and also ultimately the goal is to move to Colombia or move to either the Philippines and be a passport bro. So after all that's it. That's how you start a dividend portfolio from scratch, from zero. You budget, learn, create a budget through Excel, figure out your expenses, figure out how much you got bringing in, subtract it, and then now once you figure out what you have as a surplus, net income on a monthly basis, split it up per check, how much you have extra on check one, how much you have extra on check two, and then from there, I'm only going to invest $100 this check. I'm going to invest $100 this check. That's $200 per month. Boom, that's $2,400 per year. Then once you start get to the hang of that, also make it come out automatically. Once you make everything come out automatically, it's really easy for out of sight, out of mind. Like when you have your money coming out your check for your 401k. Once soon as it hits your gross and it comes out, you don't see it, so you can't really like be just pressed to want to go to the movies with it or buy chicken like I do. Like I buy El Pollo, I buy chicken and tacos. So basically, when you gotta have it come out automatically, then you don't have to worry about it. And then once you get used to that, then you start to see that as you're making more money,